BYD is a Chinese giant you might not have heard of, but it's one of the world's largest electric vehicle makers, outselling Tesla in China and expanding across the globe. Welcome to the channel. Today we're exploring BYD Company Limited, a major player in electric vehicles and green technology. We'll look at what they do, how they've been performing, and why they're attracting global attention. BYD began as a battery manufacturer in 1995. Today, it operates across several sectors: new energy vehicles, NEVs, rechargeable batteries, electronics, and solar energy systems. The company's vehicle lineup spans everything from affordable EVs to performance-focused electric supercars, under brands like BYD, Denza, Yangwang, and Fangchengbao. In 2024, nearly 80% of BYD's revenue came from automobile sales, especially electric and hybrid vehicles. The remaining 20% came from its handset and electronics division, which includes smart device components, AI infrastructure, and IoT solutions. This dual focus gives BYD exposure not just to transportation, but to high-tech sectors like consumer electronics and industrial automation. BYD has expanded globally with manufacturing facilities in Thailand and Uzbekistan, and sales in over 100 countries. In China, the EV adoption rate exceeded 50% in 2024, supported by government policy, subsidies, and infrastructure rollout. The company has also developed proprietary systems like God's Eye for intelligent driving and continues to invest in AI, battery tech, and energy efficiency. In 2024, BYD reported revenue of 777.1 billion yuan, up 29% from the previous year, net profit of 40.25 billion yuan, up 34%, operating cash flow of 133.5 billion, R&D spending of 54.2 billion. Their R&D team now includes over 120,000 engineers, and they've consistently increased investment in innovation and vertical integration. As of April 11, 2025, BYD's price-to-earnings ratio sits at about 25.5, which is lower than the industry average of around 40. Its return on equity, a measure of profitability, is 24%, which is double the industry average of 12%. And in terms of debt, BYD's debt-to-equity ratio is just 20%, compared to an industry average of 67%. So it's operating with much less leverage than many of its peers. Keep in mind, these numbers are based on publicly available data at the time of recording. And like any company, they can shift over time depending on business performance and market conditions. BYD is a large, complex company involved in multiple high-growth industries, especially electric mobility and clean energy. This video is simply an overview based on publicly available information. It's not financial advice and doesn't consider your personal circumstances or investment goals. If you found this content helpful and want to go deeper into companies like BYD, make sure to subscribe to the channel and follow our free newsletter. We break down global businesses, sectors, and market trends, all in a clear, easy-to-digest format. You'll find the link to the newsletter in the description below. Thanks for watching, and I'll see you in the next video.